Hello, everybody, and welcome to problem 18-6. So here we have Hail hardware, and you can go through and read this. So let's go ahead and look at what we have to do. Identify the separate performance obligations and the Hail hardware and warranty and bonus point programs, and briefly explain the point in time when the performance obligations are satisfied. So in terms of looking at this right over here is that obviously for the warranty, as we go over here, we see they sell a special portable winch. The Hail, which is a standard manufacturer that they modify, they sold 20 of these at a total price of $21,000 with a warranty guarantee that the product was free from any defects. The cost of the winches sold is $16,000. The assurance warranties extend for a 3-year period with an estimated cost of $2,100. So the first thing I would say is I would say that as we look at this for this 3-year period, that's going to be one of the warranty obligations. Basically, there's going to be a 3-year warranty from the point of sale. And then over here that they sold extended warranties for 2 years beyond the 3-year period. So over here, 2 years beyond the 3-year period. So when I look at the warranty obligations for this one here, it's basically the warranty performance obligations is you've got the 3-year from the date of sale, and then the 2 years beyond that 3-year period. Your book gives a response of the warranty performance obligations to transfer 70 specialty winches to customers with a total transaction price of $21,000. I don't really look at that as a warranty. I look at that as a delivery. The warranty is really, legally speaking, that your product will be free from defects for that 3-year period. And then with regards to the customer rewards, so really what you're looking at here is that, what exactly are these rewards? So as we look at this, you get a $1 discount for on purchases, or you get a loyalty point for every $10 of purchases. So essentially, and that loyalty point is worth a discount on future purchases. So during 2020, customers purchased a select group of products for $100,000. So right there, because if you had $100,000 worth of sales, right, basically they're going to get 10,000 loyalty points that they can use for future purchases. So as we look at this over here, in terms of what are the warranties or what are the obligations, obviously is the obligation is to deliver their basically to deliver their products. And then over here, the other side of this is they're going to have to basically give future delivery of products that have those discounts embedded. Okay, so let's go through this right over here. So the first part that we're going to look at is part B. So when they have the sale of the Hail winches with warranties. So this one here, and this is kind of also confusing. I didn't know if this was 21,000 at 70. I don't really know what a winch is. I'm sure I could look it up though and find out. Let's go through and look that up. Winch. So let's see here. Winch. Okay, so about $300 Harbor Freight, that's going to work. So as we look, or maybe work for a while. So as we look at what a winch is, right? Before you go to a client, you probably want to make sure you understand what they do as a business. So it's a very, very important to get that part of it through. So let's go ahead and take a look at this first part over here. So the journal entries related to the sale of winches with warranties. So over here, what we're going to do is we're going to basically debit cash. We'll credit sales revenue. And then we'll have unearned warranty revenue. And so as we go through and look at this, so the amount of cash that I received was $21,000. And let's actually, we can break this up in two different parts. So I got 21,000 and 21,000. That's basically to record the sale. And then the cost of that was 16,000. So if I come over here to cost of goods sold, inventory, 16,000, and then 16,000. The next thing that I want to also go through and do here is I want to basically take a look at the warranty that someone's buying. So over here, I sold extended warranties to 20 Hale winches for 2 years beyond the 3-year period for $400 each. So I'm getting cash, okay, and this over here is going to be 20 times 400 or 8,000. And this is going to be unearned warranty revenue. Or basically I'd say, call it unearned, unearned warranty or unearned warranty revenue. Because I can't really recognize this revenue from that warranty until we get going. Now, one of the things I do disagree with your book on is that if you are selling something up front and you have we know what the warranty cost is going to be up front, is that right over here. So when do you go through and record the liability? And so over here, you're going to be recording that liability at the time of sale. So what I do here, and this is, again, this is not in your book, I would create a warranty expense for $2,100, and then I would have an estimated warranty liability for $2,100. And it's better matched, the cost of the warranty is better matched with the sale. So that's how I would go through and record the journal entries for Hale related to the sale of the winches with warranties. Okay, now this one is a little bit more interesting, but I did like the way that the book went through and actually solved this. So the interesting thing is, so if I had $100,000 in sales, so let's kind of look at this a little bit more carefully. So with this one here, I had sales of the select group of products up for 100,000. Okay, now the loyalty points, remember, you get a loyalty point for every dollar, or every $10 you purchase, you're gonna get 1 loyalty point. So if I divide this here by 10, I get a value of $10,000 in loyalty points, which are redeemable for future services. So what I have to do here is similar to what I was doing with some of my other revenue allocations. My total revenue is 110,000, but my total sales price is 100,000. So what I have to go through and do is allocate. So here, in terms of doing the allocation, I'm going to get 110,000 divided by 110 over here, 9. So I've got a total here of 100%. Because I'm making sales of 100,000, but because I'm giving these loyalty points, what I need to do is to go through and make this allocation. Now, one of the interesting things is that right over here, and I probably jumped a little bit too quickly. So I came up with these 10,000 points redeemable, and I wanted to split it like this. However, they're saying that based on prior experience with similar incentives, they expect 9,500 points to be redeemed related to these sales. So I probably shouldn't be using the actual amount of loyalty points, but rather their estimate right over here of 9,500. So it's a mistake that I made. And let's put up over here 9,500. 9,500 instead of 10,000 because the experience of the company. Okay. So now what I do now is this is my allocation. So the amount of the sales is 100,000. So what I'm going to do now is my allocation. So for my sales revenue, I'm going to allocate about 91,000. For my loyalty points, I'm going to allocate about 8,600. So over here, I have my date, count, debit, credit. So over here, my first account is going to be to cash. I am receiving 100,000. I am crediting sales revenue for 91,000. And I am crediting liability under discount program for the difference, or right over here, of 8,600 bucks. So this over here is how I'm going to go through and record the sale. And the other thing I also need to do is to recognize that basically the cost of goods sold. So my cost of goods sold tells me here that the products have a 45% gross profit, which means if my gross profit is 45%, so sales, cost of goods sold, gross profit. If my sales here are, my gross profit's 45%, it means that my cost of goods sold was 55,000. So I'm going to debit cost of goods sold, credit inventory for 55,000 on each of these, and that would be to go through and to record the sale. Okay. So right over here, so we've got prepare the journal entries for the bonus point sales in 2020. So we've gone through and we've done that part. So how much additional sales revenue is recognized by Hale in 2021, assuming that 4,500 bonus points are redeemed. So if this was for 9,500 points, and over here, if redeemed is 4,500, my total loyalty points is 9,500. That's about 40%, it's 47%. So the amount of revenue that I would be recognizing from that additional sales revenue, once those points have been redeemed, would be 4,500, or I should say, take that back. It would be 9,500 times 47%, or let's see here. I'm sorry, take that back. I'm going to take the amount of the liability under the discount program of 8,675. I'm going to multiply this by the ratio of here. So if this liability represents for 9,500 points, and if I'm redeeming 4,500 points, it's roughly about 47%. So the revenue in 2021 is going to be about 4,100 bucks. So that is how we go through and complete problem 18-6. Again, I think the book's wrong. I think I would go through and record the warranty liability. That's my thought though. So anyways, have a great one. See you on the next video.